Hello, everyone. Welcome to Next Level Humanity podcast. I have dear Marcos Fernandez here. Hi, Marcos. How are you?
I'm good, Nevşah. Thanks so much for having me on today.
Yeah, thanks for being here. And our theme today is trust, time, and the architecture of capital in financial systems. Marcos is the founder of Fiat Ventures. He lives in San Francisco Bay Area. And you have been in the venture world for how long?
So we've had this fund for about 5 years, but I did a lot of corp dev investing in angel investing for a good part of the last 15. So
Mhm.
a few
Yeah.
cycles in a few different roles.
Yeah, great. And you spent your career around financial systems, fintech, capital formation. When did investing stop being about transactions and start being a way you interpret the world? And when did you decide on helping founders, helping innovative ideas shape the world, basically?
Yeah, I'd actually say it started on the founders and the ideas and the advising long before the capital was there. Partly that was because, you're building your own capital when you're younger. And, I went to grad school at UT in Austin, and that was one of my first introductions to the robust world of startups and ecosystems. And yeah, your personal cash flow as a grad student is different than after you graduate. But what I found is that one of my favorite things to do was to go get a coffee or lunch with the founder. And the best part of those meetings is when the founder says, "Hold on," and pulls out a notepad and starts taking down notes. Because like up until that point, you're entertaining ideas, but when someone is willing to pull out something to really take a note, that's when you're striking a chord. And so it really started as a lot of that, and then as I was able to make more money. It was small angel checks, and a lot of that was more of I'm working with founders outside of my day job, and I'd get really excited about what they're building, and they are allowing me to be able to participate in these rounds, which is really really cool. And that snowballed into a little bit larger angel checks and larger corp dev. You mentioned fintech. I started my fintech career at SoFi in the student lending space. We can happy to dive in more. And then I went over to Ripple in the digital asset and cross-border payment space, where I was able to take on a lot of business development partnerships and corporate development roles. So starting to write more checks. But to your point, like it's not about the exchange of capital. Like that's way too transactional. It's about backing these phenomenal founders who are dedicating their lives to solving really key issues. And the way that we see it is it's not just about solving issues to make money, but it's filling gaps in the world around us. And again, we can kind of dive in more, but if it's just capital, then it's just too transactional. It's really finding folks who you can put everything behind. And for us, it's more than just capital with what we can bring to the table, as part of Fiat Ventures and Fiat Growth. But again,
Yeah.
I'll pause there. There's a ton more that we can dive
Yeah,
into.
sure. No, I mean, I'm wondering what early experiences shaped your understanding of, um, trust and all the financial systems and where does this appetite for helping founders coming from, come from?
Yeah, I mean, a lot of like just helping people in general is rooted in my upbringing. So, both my parents are from Mexico. I grew up in El Paso, Texas. Wonderful community, and my parents have done, very, very well for themselves given their backgrounds. But in a place like El Paso and, the 90s, there's just not a ton of capital around. So people aren't judging each other based on where do you work or what do you drive or where do you live. It's much more based on, your character and how you hold yourself. And you also, we spent a lot of time close with the church that I grew up in different groups of just giving back and finding that. So I give credit to my parents of this like strong DNA of like leave this world a better place than when you found it. And no matter how tough of a situation you're in, there's always ways that you can help others. And so that's kind of part, and I'm very fortunate to have co-founders and partners who feel the same, that for us with financial technology, we're proponents that you can do good and do well and not have to sacrifice returns for doing that. That's not a something that you have to do and give up on the alpha of it. You're actually filling gaps and solving these real core problems for large swaths of people. And so that as now we invest, like that's a core value. And the example that I give people, right, is as venture investors, we're trying to invest in a world 5 to 10 years from today. That world is naturally more homogenous. There's more access to different services within financial services, both here and across the world. There's huge gaps. There's, hundreds of millions of people globally who are either underbanked or unbanked, and basic access to services is not available. And so what we look for are founders who understand those problems, are building solutions for them, the net result is better financial access for, again, hundreds of millions of people globally. And then you can build sustainable, profitable businesses based on the backbones of that. So again, kind of a longer answer for a simple question, but some of it is from my upbringing and, having a deep connection with, doing good and doing well. And then also having seen it as operators, we know that that model works.
Yeah, and before you became an investor, what values did you have already, guiding you? Is it like helping people, helping ideas, and what else?
Yeah, I think a lot of it, and again, like credit to my parents is around selflessness. Like my dad used to teach me this, and I have a 3 and a 5 year old now, so I'm trying to instill as many values as you can, but do something every day to help someone else out that no one else knows about. So oftentimes today you hear about these things, and oftentimes it's for brand building, but making it a habit in your daily life to just do something for someone, and it doesn't have to be monumental, from holding open a door to like buying someone a sandwich. Like it's doing these things that you can constantly do. And in that selflessness, even for our founders, like we need to know the role that we play. There's often this unique tension between founders and investors, and I get it because we too have investors, and that dynamic is at play. But I try to let our founders know that we work for them. Our job is to enable them to be better, not just through our capital, but through our network, through our operational experience, through our consultancy. And so a lot of it is like it's not a zero sum game. There's room for all of us to win. And again, I'm lucky to have, my two partners, Drew and Alex, who feel the exact same, and I've seen that come to fruition. So we're kind of more of like, especially in venture, you can get these sharp elbows type principles. We're more of a rising tide and trying to build a big ecosystem and lift people up with us. And, we are huge proponents that that will serve us better in the long run than, trying to, catch edges and take advantage of founders or situations.
Yeah, I think building communities work amazing in the long term, in the long run. I have some other VC friends who are also, building their own communities, and as the community builds, it's just, it's not only about, getting the funding, but it's, building a community around you that can help the companies you choose to help, the founders you choose to help. When we come back to fintech, fintech
Yeah.
sits at the intersection of regulation, technology, and human psychology. How do
Mhm.
you form conviction in systems that are constantly shifting in this world?
Yeah, you bring up a good point of it sits at the center, is particularly psychology, right? Where you're highly regulated and there's important protections in place, but also finances is one of the more personal things that individuals can think about, and oftentimes not in a positive light. It's something that is unfortunately impacts a lot of people, again, globally, but certainly in the US, not in the most positive cadences. Some of the statistics around the lack of having savings accounts or lack of access. And so there is almost a psychological barrier to become more comfortable with that. And what we've seen really over the last waves, right, is the last, call it fintech evolution. This is the SoFis, the Chimes, the Robinhoods, the Betterments, and Wealthfronts. What it took were physical brick and mortar stores and allowed you to digitize that, largely through smartphones. So now you have a bank in your pocket. What we're starting to see now is consumers aren't just more comfortable doing financial services through these digital platforms, but they're also comfortable doing that with non-financial institutions. So what I mean by that is, Apple Pay and Google, they are now becoming some of the largest fintechs. You see this with Shopify, right? They have Shopify Capital, which is now a big, substantial part of their business. And same with like Starbucks, their rewards program is one of the most successful fintech rewards platforms that have been launched. And so you're starting to see that proliferation with brands that people trust almost lowered the psychological barriers, because it feels less like I'm walking into, to use it in a positive example, their investors are, but like a Bank of America building that, has these big pillars, and you're walking up to someone at a window. Now you can get exposure to ways to save, to better spend, to better manage your capital through much more user-friendly platforms. And so that's a healthy thing because you're lowering the barriers of entry to access and psychological barriers. In addition to that, you've seen the emergence of a lot of what you call like banking as a service or fintech platforms that allow you to launch products more easily. What that means is more competition, which is not necessarily good for us and for our founders, but it's good for consumers, because that means now that you have access to a whole bunch of different types of financial services through all these different platforms. And so I think you're seeing it move in a very positive way, where the abundance of options coupled with the familiarity of digital adoption, and doing that with not necessarily large financial institutions, is creating a really positive outcome ultimately for the end consumers who just need better access.
Yeah, lovely. And after years of evaluating founders and markets, where are you today? Like, what do you trust today, and how do you decide today? Do you decide with data, with narratives, with maybe you have some pattern recognitions? How do you decide? And what kind of founders and projects are you more, compelled to back?
Yeah, definitely. It's an art and a science, right? Like there's not a clear I wish there was a way that you could very clearly say this equals that. For us, our model gives us a little bit of a unique advantage. So, quick overview. Our venture arm certainly is a robust part of our business, but we also have a growth consultancy, and this consultancy works with anywhere from 25 to 35 companies at any given time. We've now worked with over 300 companies over the last 7 years, and that's across stages. That's pre-seed stage all the way to, Fortune 100 companies. And what that does for us is it allows us the ability to see what's going on across stages and across sectors to make better decisions around where we want to invest. So for us, right, it almost creates a wake, this information and this data asymmetry to then allow us to make the best investments behind it and to also attract great founders to the ecosystem because kind of back to we're not just providing capital and introductions, but we can be a hands-on participant in the growth of their organization, which is really rare and gives us a really good opportunity to help them build. So with all that, yeah, there's a ton of data, right? We're aggregating that across what we're seeing. We're seeing a lot of trends. We define our own trend reports. We're actually getting ready to publish that at the beginning of March annually, where we talk about what are the 10 to 12 things that are getting us the most excited based on what we're seeing in market. But then also, the art of it, right, is especially because we're primarily investing at the seed stage, which is still very early. You are backing founders, you are backing people. And at the end of the day, that is the number one reason why companies succeed or fail. Ideas are important, but they can become commoditized. Markets are very important, but they can shift. Products change. There's so many examples. And so what we really go towards then is founder, right? And there's a couple ways we evaluate that. One, it's not a term that only we use, but we use it as a founder market fit. So what is your unique background that gives you perspective to this problem that you're solving, that then lets you kind of outwork everyone else? We like to see velocity. So how quickly can you and the team ship product? That means you'll have the ability to move quickly within those markets. We look at a lot of co-founder dynamics. How did you meet? How long have you been working together? The number one reason why startups fail are from that. So we spend a little bit of psychological, right, of like what motivates you to build this and to dedicate your life towards this. And, at the end of the day, we're ultimately, creating a partnership because we're backing with capital, but we're also providing a lot of time and services and vice versa. Those founders are now making us a part of that journey, especially if we're leading around, we're on the boards, we've got governance and oversight. And so it's important for them too to evaluate us just as much as we're evaluating them, because at the end of the day, it's a two-way street or the best relationships. So yeah, another long answer for you. So it's a lot of different things, but founder over everything.
Yeah. And do you also look for like self-mastery of the founder? Do you like because my background is, as you know, behavioral health sciences, and I'm always
Mhm.
wondering, like, does the VCs see the self-mastery potential? Like, are they able to govern, most areas in their lives? Because when you, I think, invest in seed and pre-seed, uh, the characteristic traits of the founder are also important. Like, does he or she, do they do what they say? Is she or he someone who walks her talk? So those are like also very important. And maybe being open about things. I mean, I can imagine as a VC, you want them to be open when things get challenging as well. And, you don't want to hear only the things that go well, but also the things that go, wrong. But if they have kind of like some, I don't know, confidence issues or some, you know, other issues with themselves where they can have the potential to hide things, things might go wrong, or if they are having, you know, a hard time executing, they're having a hard time, governing. How do you see that? It's like, how do you evaluate between founders that are masters and that have the ability to govern and execute, and the others that are not? Like, what are the um, patterns you recognize?
Yeah, I'm
Yes.
glad you brought it up because it's not just an important thing. It might be one of the, if not the most important thing, right? And it's one of the most hardest things to evaluate, right? Because if you're a founder and I get it too, because I'm out there, talking to people about our own venture capital fund is you're going out there and you're talking to hundreds of people, whether it's for capital raising or for hiring or for sales. And so it's easy to get into this routine. So as an evaluator of those characteristics, it's really difficult over Zoom or even in-person meetings to get a deep sense of, I ultimately, I think at the end of the day, trust. Like, are you someone who trusts me? Can I trust you? And not just to be stewards of capital, but to be able to deliver on the promises that we're making each other and knowing that sometimes that's not always going to be great. Like in any relationship, there will be speed bumps, there will be major hurdles. I just want to know that you have my best interests in mind and you know those best interests and vice versa. I really try to understand what are the core things that you're trying to do so that I can take care of you along this journey as well. It's a tough thing because again, the role that we play if we're leading around is we have to have the best interests of all the investors who past and current until we hand that torch in a future round and someone else takes on that responsibility. So while we want to be very founder friendly, we also have to be very clear from a liability and governance perspective. We have to ultimately ask questions on behalf of everyone who is on the cap table. And again, as a founder, it's your responsibility to know that once you take on capital, that you are fiduciary of that money, right? It's not just fun and now you've got institutional backers. There's a responsibility element. So yeah, to your question, it's really difficult. Even when you think you know people, sometimes certain characteristics come out. The other reality is nobody's perfect, right? Like we're all human. There's not like the perfect someone has figured it out. So what we try to instill is trust up front. I am always very direct and transparent throughout the process. This is where you are. Do you have any questions for me? Like just I don't want there to be any surprises at any point, and I certainly don't want people to think that we're trying to hide anything because we're truly not. We're trying to put together this partnership together. The other thing that for us that we're fortunate with is in a lot of cases, some of the founders that we back are people who we've worked with for the past, right? So I mentioned this 300 plus companies in our ecosystem. Some of the best investments that we've made are with founders that we've actually been working with for 3, 5, 7, 8 years. We've known them since we were in operating roles. And that is a huge advantage because you don't need to underwrite that as much because you've seen them in the trenches. You know how they respond in tough situations and you can judge their character a lot more easily. Vice versa for us, they've seen how we operate. They've seen us as operators. They've seen what we're doing now. And so that helps build trust on their side because they also understand that we're not just trying to sell a game and then we like close a deal and then we're gone. Like there are things that we intend on delivering on our side. So yeah, it's a tough one. There's no short answer for it, but it just takes time and the best investments are those
Yeah.
that we've been able to cultivate relationships with historically.
Yeah, certainly. Yeah, I can imagine. And what do you think is the main mistake other investors make when they underestimate the complexity of financial infrastructure? What are the mistakes done in the investment world?
Yeah, specifically in our sector, and I think any sector, there's what you call like hype chasing, right? So there's like something big, a sector, people realize it's a big thing. And what happens in that is people just know they want exposure to that sector. The hardest part in venture is not just guessing what's going to work within an industry or market, but you also have to back the best team to do it. And depending on where you're at, it's not always multiple winners. There's like one within a category. So that's I think what you can see then is as certain trends arise, certainly we're in a lot of an excitement around AI right now across a whole bunch of different sectors, which I'm happy to dive into. There's a lot of validity behind that excitement, but also there's a lot of hype chasing. And so that's what you need to be careful the most is not just getting exposure to a sector because you feel like you need it and here's a founder that can solve it, but being patient enough to wait for the right opportunity, even if that means you miss a certain sector and exposure. And so, yeah, for us, the way that we approach that is we come up with these themes and theses, but ultimately we are backing founders. So, at the end of the day, if a founder comes and they're teaching us about something and it's opening our eyes up to something, that is a much higher likelihood of path to success than here's a company that falls within one of our main thesis areas. That you still have to make sure that you do your diligence, that this is the right team and this is the right product for that sector.
Yeah, great answer. Yeah, I
It's
agree
hard.
that chasing the hype,
Yeah.
yeah, chasing the hype might not work always. And where are we around the world in between in between AI and fintech?
Yeah, it's interesting, right? On AI in general, and then I'll dive into finance. I think we're at a moment, a positive one where we understand the implications of AI across software and hardware. And that's important. But we are also at a moment where you haven't necessarily seen the full commercialization of that in the way that we know it can happen. And the example that I like to use is like when the iPhones first came out, we knew that there's something powerful happening in the way that we communicate and can reach people. But we didn't know that, that would open up a cadence where we're getting into strangers' cars to go stay at a stranger's house. But, now it's weird if you don't use Uber and Airbnb, right? Like, so we're kind of at the stage where we understand that something big is happening and there's all these projections for what it can be, but we're not quite to the commercialization at mass that we need for it to be. But we will get there. And so there's this almost like this in between. And historically, we have been, I guess humans have been often underestimate the time it takes to get to that broad adoption. I'm sorry, yeah, underestimate, but then also don't have a realization of how big those implications are over time. And so within financial services, particularly, it's a little bit different. You mentioned this earlier, but you have high degrees of regulation around personally identifiable information, PII. Different structures are typically a little bit more archaic because there are those firewalls and protections. It's there in place, and then certainly consumer protections are in place for the right reasons to make sure that anything that's launched it has positive impacts. That's a whole different podcast on some of the trends that you see, certainly around like gaming and gambling. But net, we want to make sure people are in a better position. When it comes to AI, we're seeing a lot of really great applications, and it's not necessarily like the way that we interact with the iPhone, but it's in these really archaic spaces within traditional financial services that just have never been digitized, and now you can start to build. I'll give a couple examples. Within healthcare and payments and processing and coding, we've made a few investments in some really phenomenal founders who are just helping you, whether it comes to social work or understanding as an individual what you should not just enroll in, but how to get rebates back, what you do there, billing, solving those core issues that lead to this incredible reconciliation process that is really hard for individuals, especially in outpatient clinics and especially mental health services. So you're seeing really good applications. Another one that we're just closing on within the insurance space, really boring stuff, but like mid-market brokers and MGAs and P&C coverage that are just used to having to spend 8 hours to bind and draft a policy can now do that in like 8 seconds, just integrating to all these different systems on their APIs and creating an agent-like environment to just make it easier. And people love it because what we look for are not customers who are looking for AI exposure to say they're using it. We're looking for customers who don't really care what's being used. They just know it's a 20x improvement on whatever they're doing today. And so when you think about that in AI, I get really excited because out of all the industries, because of everything that I mentioned, the legacy infrastructure, the regulations, it's one of the oldest to change, but it's also one that is just ripe with all of these processes that are very replicable to help make it easier. And so, yeah, I get excited now. There is a lot of hype as always, but I am grateful to, to have seen in our team to see the actual adoption of that technology by people who, again, are not technologists. They just know that it makes their work environment and solves a lot of problems for you on the business side.
And financial innovation is very powerful. It can empower and destabilize. How conscious are you of the downstream consequences of the capital you deploy?
Yeah, very, very. We do not position ourselves as impact investors, and we made that conscious decision when we started the firm, right? We were in the throes of, George Floyd's murder, and, myself being, Hispanic, my co-founder is African American from East Oakland, and my other from the Central Valley who's Jewish. And there's a lot of people raising capital the right ways and allocating it, trying to get more representation. But what we decided is we want people to see us as great investors based on our access from our consultancy and what we've done as operators. But we do want to hold our values true, which is you can do good and do well, and that financial technology is one of the greatest drivers of financial mobility and access. And so we do. In our deal memo, we look at opportunities. We not just think like, what is the market that they're solving for today, but if this works at scale, is this going to be a net positive or negative impact on the consumers they serve? It's less about what we do and more what we don't. So I mentioned it earlier, gaming and gambling, things that can create these viral trends that ultimately largely hurt folks. We do some things around infrastructure and cross-border payments with stable coins, but we don't do tokens, anything that can drive mania and can hurt end consumers at the end of the day. Yeah, so we predatory lending. There's certain businesses that just they go after groups in not very forthcoming ways. Now there's ways you can do that in a positive light, but we pass largely on those. So we incorporate it. We don't publish this outward, but we do track those metrics. We report annually in an impact report. Some of our investors and backers are they care about that. They want to make sure that you're doing what you say you're going to do, and so it's our way of showing them that we are tracking this, that this does matter. But for us, it's just not something that we use as a marketing tool because we want people to see us as being great investors driving great returns. But certainly, our mission and ethos is aligned with that too.
Yeah, lovely, lovely to hear that because you're in a very impactful situation, of course. How do you define real progress in fintech? Beyond valuation, speed, adoption metrics, what is true progress for you?
Yeah, I think it's well, from an investor perspective, it's always revenue, right? So revenue is kind of like the biggest indicator that people are using a product and willing to pay for it. And again, that's not in a predatory way, but in a way that showcases that there's value here. There's transactions. But progress can mean a lot of different things, right? It's how many end consumers are you serving? And what we do in this annual report is we look at the companies that we have, the products that they have, and then the consumers that they serve. And it just shows we track that year over year because essentially what we're looking for is how many more people have been able to save better, to spend better, to get access to certain solutions that previously haven't had that. So that's ultimately how we're tracking impact at the end of the day. For the companies themselves, and this is, what we're held accountable for, it's largely, are they raising additional capital rounds? We're audited, which means, we have large financial institutions as backers. So we have to show that we're doing the right thing to show value of that underlying asset, which is our investment. In those cases, it's often based off, have they raised additional capital from net new investors via a price round? That's a good indication. And then also for our auditors, it's looking at, runway and revenue. So that's probably the less fun parts of what we get to do, but it's important because we're, a licensed financial institution and we do have backers who we are stewards of their capital. And so that certainly we like to track the impact that the companies are having on the world around us, but we also are very tactical in how do we track just performance from a reporting standpoint too.
Yeah, lovely. And if we can start with some personal questions, what belief
Of
about
course.
money, success, or innovation have you completely outgrown since you started working as a VC?
Yeah, I think there's this perception, and in some ways, I even had it somewhat naively. The VC is a lot like Shark Tank, a popular show here in the US, where founder walks up, you sit there, you ask a bunch of tough questions, you write a check or not, and it's not that, right? For us, I'm lucky to have partners, and we've built out a firm where you productize out the investing side, but my job is really building the firm, raising our capital, building these deep partnerships with our investors who are, close partners of ours. And so it's building brand, it's things like that. But I think probably one of the biggest things that I've learned is that just how with us it takes time to write a check into a founder, it's elongated 4 or 5 times with the people we're raising capital from, which are large financial institutions, endowments, pension funds, family offices. These are not short-term relationships. They want to see that, that we are doing the things that we are saying that we're doing. And it's important for us to cultivate that in a non-transactional way over time too. And I get it. It's actually, my eyes have been open just to the people who are behind that allocator space and what it takes to really, do that job, which is a very difficult one, especially if you're investing across a whole variety of assets. So I think that's probably the biggest one is just it just takes time to build those relationships, but also a lot of empathy for the people who have to make those decisions. It's not as easy as I like this, I'm going to invest. So it's just how it's not Shark Tank for us. It's also not Shark Tank for, the LPs who are evaluating these firms.
working so closely with capital shaped your understanding of power, particularly quiet and systematic power?
Yeah, I'll kind of speak personally, and then I'll kind of talk more systematically or systemically. For me, it's made me more conscious to that dynamic I mentioned earlier between investors and their founders, and even for us and our investors, is that whether it's spoken or unspoken, sometimes it can create a little bit of a power dynamic. And so, what I try to do, and then my partners are the same, but we all kind of remind each other is again, our job is not to tell the founders what to do or how to build their company. Our role is to work for our founders. And I've often seen this on board meetings where other VCs, in some cases, those who don't have, entrepreneurial or operating experience will come in with these really strong recommendations, thinking that they're easy to implement. The founder will think they need to go off and do them. It distracts them from something else. And it's just kind of a waste of everybody's time. And you get to the next board meeting or call, and they'll say, "Hey, you had this idea. I went out and did it. It didn't work it for why?" They'll be like, "Oh, I forgot about that." So there's a little bit of a dynamic then between the investor and the founder. And so that power, right, for us is making sure that we acknowledge it with our founders. We let them know this is our role in this relationship and that it's okay to tell us no. And the best entrepreneurs are the ones who already know that because they've done it before. And so they're subtle in how they do it. But certainly for first time founders or those that care about the relationship, it can be new. So that's one just for us, right? It's like set a clean slate, make sure that we know the role that we play. Broadly, outside of that, it does play, right, a big role, certainly across asset allocation, asset ownership, consulting. Um, a lot of the folks that we invest in are largely underrepresented founders who are trying to enable betterment around the world for them. And similar with other emerging managers who are in our peer set and who, we work closely with and want to empower as well. And at the end of the day, it's not sheer numbers, it's dollars. 75% of capital invested into venture capital has gone to 30 firms. 20% of that went to a single firm, Andreessen Horowitz, with their $15 billion recent fund. You're seeing this real aggregation of capital from these massive mega funds to these emerging managers like ourselves who are specialists in certain categories. And that can create a little bit of an unhealthy dynamic with valuations and with who's actually getting access to the fruits of that capital and what does that mean for representation. Again, that's a separate podcast maybe for a different topic, but that ultimately is what moves the needle, and we're seeing that kind of bifurcate a little bit.
Mm, yeah. And a philosophical question. What truth has stayed constant with you throughout this whole process? Even when you weren't an investor, like what's the truth that is holding you when things go wrong, and what's the truth that you come back to
Yeah, it's
or
something
remind
again that I
yourself, yeah, that keeps you on track?
yeah, yeah, definitely. I am deeply moved outside of money, right? I have an opportunity to do something that no one else in my family nor my community where I'm from has ever had the chance to do, and I don't take that lightly. So like but people will tell you for better or worse, like I work. And my philosophy that has always worked for me is there's two things in this world that you can control, your attitude and your level of effort. You can't control the market, you can't control a lot of dynamics around you, but all you can control on those two. And if I am successful, I hope it's because of that, although luck is often engaged. But if I fail, I at least don't want to look back and wish that I worked harder or that I sacrificed my integrity and character to do it. And so I'd say those are the biggest ones is like when I go after these things, when I have these really hard moments, when your back's up against the wall, it's just, I am not going to sacrifice who I am. I'm going to keep this positive, can do, ultimately like optimistic. In some cases, maybe that's a fault and just work hard. There's no shortcut to long-term success. It's compounding effort because that's ultimately what it takes. And then from an attitude perspective, it's bringing people up around you because at some point they're going to take care of you too. And that's your reputation. And again, you mentioned it earlier, trust is everything in this industry. And so, yeah, that's kind of my mantra. That's always really, it's been good for me. It doesn't mean I've always been successful. I've certainly, still make mistakes and learn lessons all the time, but that's what keeps me moving forward.
Yeah, I would say three things in the investment world: hard work, trust, and sincerity. Being
Yep.
open. I think they are the three like, beautiful traits. Thank you very much,
Yeah.
Marcos. I enjoyed every moment of this conversation. It just passed so quick. Can you believe it's 35 minutes already? But I have
Yeah,
one
no, thank you so
message
much.
before you
Yes.
go. I ask this question to almost all of the guests I have. If you could leave one message for the next generation of fintech investors and founders about responsibility, restraint, trust, everything we talked about, what would that be?
I think it would be that doing good and doing well aren't mutually exclusive. The reason why Chime is successful is because it's reached tens of millions of consumers across the US to help them save for the first time and take away banking fees. The reason why Robinhood's successful is largely the same. And we're seeing that across that. So again, I think people will chase hype in areas where they think that they can see the largest success.
Mhm.
I think there's a lot to be said for a lot of the broken systems and structures. And if you're doing good by your customers, if you're driving that meaningful change, then there's absolutely returns from that. So for everyone kind of investing or thinking, oh, now we're going into all these other sectors, I would challenge them to think about what is the impact that you're leaving on the world and end consumers around you. And don't think that you're sacrificing returns and performance to do that. It's actually the exact opposite.
Yeah, you know what they say. If you want to create wealth, find a big problem and solve a big problem of a big group of people. So a
That's
big
it. That's
problem
it.
of a big group of people mean just it's wealth.
And people are getting better access to mobile options. You're seeing it,
Yeah,
right? The group of people is only growing, and so yeah,
yeah,
that's a great way to put it.
yeah.
Put very simply,
Yeah,
TLDR. That's
yeah,
it.
exactly, exactly. Yeah. Thanks, Marcos, and thanks to everyone who's listening and watching us on YouTube. I will remind you to become a subscriber on our channels. Thank you a lot, Marcos. It was lovely. Anything you would like to add at the end?
No, just thank you so much. I'm such a big fan of the work that you do. And also, just back to the psychological aspect, I think oftentimes people look at data and numbers and growths and markets, but like at the end of the day, we are human beings working with human beings who
Yeah.
are, we're all trying to become better, but we are also certainly not perfect. So thank you for all the work that you do, bringing
Yeah,
that to
thank you
life
too.
for
Same,
people
same
around
to
us.
you. Yeah,
Still working
yeah,
on it. We all have room to build, but yeah,
yeah.
it's been a fun ride so far.
On both sides.
Yes,
Yeah.
yes, absolutely.
Enjoy. Enjoy, everyone, and I'll see you in the next episode. Thank you. Bye for now.
Thank you.